Welcome to Loup TV. I'm your host, Gene Munster. Our topic today is Bitcoin, specifically Bitcoin 2021, and then zooming back about the significance of what came out of that recent conference and why we should all be focusing intently on where this is going. I've got two astute studying participants in this market. Please welcome Hector Fernandez. Hector, I've known for 20 years. He's worked in investment banking at JP Morgan and TMT. He's also worked in credit. I would consider himself deeply studied in the world of crypto and blockchain. And separately, please welcome Saul Ternullo. I did not give your last name proper justice there, but welcome. You also have worked at a Big Four accounting firm in a crypto asset department. Had no idea that the Big Four even had such departments, and have moved on and continue to stay focused on the segment. Both of you were at Bitcoin 2021. Welcome. I'm going to start with Saul, and maybe just for those who don't know, Bitcoin 2021, it was 18 months. Everybody was in a position where we weren't spending time together. Hector, you had talked about this is almost like a Woodstock type of event. That image is pretty powerful, of people coming together that had almost a religion around it. But I'm curious, Saul, is it still a religion, or is it taking on some new contours? And within that, what were your 2 or 3 big takeaways from Bitcoin 2021?
Yeah, happy to jump into that, Gene. I think, Bitcoin 2021 was a reflection of 18 months of pandemic progress, which led to a lot of heads down work that actually drove forward kind of the institutional adoption curve in the space. And so this conference represented the intersection of kind of crypto native Bitcoin, focused developers, engineers, business leaders with the mainstream financial sector in a way that hadn't happened physically in person before, on the backside of so much technical and business and product centric kind of progression.
And so, how many people attend an event like this, at least in person?
Yeah, I think the media was reporting like 12,000 participants in person, but the event itself may have garnered more than 50,000 to the city itself. There were a lot of folks that didn't attend the conference itself, but was a kind of like a Woodstock moment, as Hector described. A lot of sidebar conversations outside the venue itself. And a lot of major capital financing events came out of those discussions for different organizations that were on the ground. So
you said a word that piqued my interest: institutionalized, institution of Bitcoin and crypto more broadly. Tell me a little bit more about specifically what happened at Bitcoin 2021 that makes you more confident that we're moving in that direction.
Yeah, I think it was just that confluence that I was describing of kind of major traditional fintech leaders like Jack Dorsey coming on stage and making, bold kind of forward statements as far as how they're going to think about this space, all the way down to the open hardware layer, which is a very sophisticated approach in thinking about kind of Web3 or broader blockchain-based architectures. I think
you take Dorsey's comments and kind of put him into plain English.
Yeah, so when you look at kind of what's going on in the Jack Dorsey tweet series and Perspective on Stage, it's really focused on the idea of creating open source or open hardware, open innovation, all the way down to the device. And when you look at kind of the core technology that facilitates safekeeping of crypto and digital assets, it comes down to these devices, hardware security modules that are managed by third parties. And so he's talking about reinventing that and creating open transparency of design all the way to the lowest level, really trying to maximize trust and transparency in this innovation cycle.
And so just to finish the thought, you maximize trust and transparency. What's the output? Just more crypto adoption?
Yeah, I think that the adoption wave continues. I think the sophistication of the solutions in the market to protect investors from a technology perspective continues to evolve. And I think the institutionalization of this asset class was kind of represented by a discussion that I spoke about on a panel down in Miami, which was focused on proof of reserves, which is effectively a testing approach that auditors and different organizations can take to prove that they actually hold customers' funds one for one, and they're not running a fractional reserve exchange or custodian. And there's ways that we can use the technical features of blockchain technology to cryptographically prove these things. And so we set out a paper with the Chamber of Digital Commerce, which is a large trade association, focused on this discussion, and then actually spoke about it at Bitcoin 2021 to an audience that largely was versed. There was a lot of folks there that raised their hand at the start of the chat and had heard about proof of reserves, and were looking forward to kind of standards evolution around this from an accounting perspective.
What do you think from an institutional standpoint? What do you talked about why the temperature is kind of moving higher and them wanting to pursue this? Ultimately, what are the types of things, the solutions they want to put together? How do you see it actually impacting their products? Can you give us a couple examples of how it would play forward in a few years?
Yeah, I mean, the regulatory clarity that was achieved from kind of OCC guidance letters and now being subsequently questioned to some extent and re-reviewed. But those kind of lighted the way for a lot of the banking sector and tier one institutions to activate crypto custody, which was clarified through those OCC letters saying that banks can custody Bitcoin, and they can also use their custody collateral for stablecoins and then use blockchains as payment settlement rails. So those kind of regulatory movements laid the way for the narrative around treasury investments in Bitcoin as a result of inflation risk kind of came together at a very meaningful point in time where banks had the green light to effectively move forward, and there's clear investor demand with major treasury investments from Square, Tesla, MicroStrategy, and many others. I think the most notable of those plays was actually MassMutual, which is one of the most sophisticated risk analytics and actuarial firms in the world, understanding a broad macroeconomic trend and then preparing themselves effectively for long dated liabilities that they naturally have in their business. So
final question, then I'm going to jump over to Hector, but final question is on the bank side. You talk about kind of opening up the custody of crypto assets. How many of the major banks currently accept crypto? You can deposit crypto at your bank if you're for example, Wells Fargo person.
Yeah, so pretty much every bank has now tipped their hat into kind of the activation of crypto products and services. They've taken a risk-conscious approach to adoption in terms of the customer segments that they actually serve with these products as they activate, and they're at varying levels of maturity across the spectrum. But from the institutional custody perspective, now every major institutional custodian or traditional custodian has moved and made public announcements about activating digital custody for crypto. Northern Trust moved through a joint venture with Standard Chartered and Zodia. State Street just announced State Street Digital last week. Bank of New York Mellon announced their digital asset custody capabilities several months back. And so, there's a variation on the product side and kind of the customer segments they're serving largely from a risk and compliance and maturation perspective. But, everybody has started to make the move now. So
I guess I said one more question. I'm going to do one follow-up on that is, at what point do you think that someone who is a customer of one of these banks goes onto their mobile app and they've got their savings checking and crypto account, they're all right there and they can kind of freely move assets around? Is that a year away? Is that 10 years away?
Yeah, it's definitely much less than 10 years. I think the retail client segments will get served through the traditional banking sector as they kind of have an elevated or a slower progression of service expansion. They might start with private banking and high net wealth individuals, and then eventually 12, 18 months from now, start to activate some of these features in a very controlled and kind of conscious way to retail consumers. And I think there's a lot of different education components and kind of controls that come with accessing or providing these types of products to the retail audiences, but there's a lot of thought and design that has gone into those things. So I'm excited to see it. And I definitely think 10 years. Yeah, give it a year and a half to 2 years.
Okay. Hector, over to you. Same question. Bitcoin 2021, what stood out that you feel isn't fully appreciated?
Yeah, well, I think one of the things is, and I wrote to you this before, I've been to Omaha, and you go to Omaha, you get this little guy, your Berkshire, investor. This one's bigger, okay? And what happened at the Woodstock of Bitcoin is it's an energy that's different. It's an intensity around people coming together saying decentralization is going to affect all sectors. You believe in the S&P 500, sector-based, Moody's ranking of industries. It's starting to affect broadly. And this is where I think it does kind of join with what you all do at Loup, right? There's aspects of decentralization that's going to affect real estate, art, content, manufacturing, supply chains. And so what we saw, one of my observations, I was not on a panel like Sal was, but the folks that I was around were lawyers, CFAs, MBAs, people trying to figure out what mental models do I need and how much energy am I going to put into this? And even at noon on Saturday, I still thought this was an industry thing. This is a sector thing. You and I grew up on different sides. You're an equity guy, I'm a bond guy. Credit, equity. And when Jack Mahler stood up and said, I'm going to announce something that no one here is ready for, and he pipes in the El Salvadoran president, it was like, whoa, we are going now to the moon. Because the governments, what Sal is an expert in, the institutionalization, it's not corporate institutionalization.
What did El Salvador, if you will?
Yeah, let's talk about that.
The president of El Salvador is, I apologize.
No, let's talk about that. So what he announced is he said, I'm going to provide legislation around legal tender, okay? I don't think for your audience, we need to get into the definition of, what's a reserve currency versus legal tender, et cetera. But last week, El Salvador, now 2 weeks ago, they said, okay, you can use legal tender in El Salvador. What that means is someone in El Salvador with a Bitcoin wallet like this can go into a store and say, I would like to buy a wallet. I would like to buy a hat, my Satoshi hat. I'd like to buy paper with Bitcoin. The transformative aspect of that was missed by the US media Saturday and Sunday. El Salvador, little country, corrupt, gangs, murder capital, all this stuff. Well, you wake up and by Monday night into Tuesday, Brazil, Argentina, Ecuador, Paraguay, Panama, Honduras, El Salvador, and Mexico are saying, we are going to initiate legislation. The countries I just described to you, it's over 500 million people. Coffee, energy, sugar, all sorts of things that we enjoy in the developed world come from Latin America. And so, honestly, Gene, I go to Omaha and Bill Gates is there. And Bill Ackman walks behind me at the steakhouse. Corporate America. And that's great. And it's fun. I go to Miami. There's lawyers thinking about import-export. There's people like Jack Mahler saying, I want to drive remittances payments, the arbitraging of emerging markets, I want to drive that to zero. Okay? He's doing that on the Lightning Network on Bitcoin. And now the president of a country that has all sorts of volatility is saying, I see the future and I want to be a part of it. So the media, if you go back and you read Saturday and Sunday's paper, this is a non-event. You fast forward, well, now it is an event.
Mm-hmm. And let me, that is the, I guess, Jimi Hendrix moment, as you've described it, and a good takeaway from the event. And I'm going to be back to you in a second here, Hector, but one question for each of you. And Saul, when I think about all this stuff, it's great. And then I think about the regulatory environments and governments wanting to hold on to custody of these assets. I think about what Tesla did recently, and I think that it was driven in part because of what was going on in China. It still feels like there is, even though legislation is being introduced, as you said, Hector, still feels like from a compliance regulatory standpoint, government's comfort around all this, we still got a long way to go. Am I missing the point?
I mean, I don't think you're necessarily missing the point. There's going to be continued evolutions of the regulatory environment and the policy environment. There's innovation happening at a pace in the financial sector that has literally never happened before. For an anecdotal example, I watched at my first employer, State Street, financial applications or fintech applications with machine learning take 18 months to be developed. There are new financial products and platforms that are being launched literally every day and building on top of each other through composability of these applications on public networks. So it's, you know, the regulatory environment on a forward basis will continue to evolve. How to interact on a basic level from an investment perspective in context of this treasury investment idea that you mentioned around Tesla. I think I spoke about Square and MicroStrategy obviously as well. That's pretty well proven. What that looks like from an AML perspective, an accounting perspective, a tax perspective, it's actually not advantageous in many circumstances when you look at accounting and kind of property and tangible assets on a balance sheet and the impact of impairment to those assets and subsequent impact to reporting. But the model of how to do this compliantly, make the investment, potentially build a business that facilitates trading, execution, lending, all of those things are proven, and there are established regulatory models that cover those things. So, yeah, I mean, I expect this stuff to continue to change, but how to do basic things like make a treasury investment in Bitcoin, there are very proven models as to how to do that in a regulatory compliant way.
Good to know. We're kind of easing through that too. I guess if any of you had any questions, whether or not Saul worked in the accounting world around Bitcoin, just rewind and listen to what he just said. You can't fake that stuff. Hector, back to you. I want to kind of go up to a higher level here, and just for at the most basic level, can you give us a 101 on Web 3.0 and why it's part of this conversation?
Yeah, and like Gene mentioned, we got to know each other back in the early 2000s, and in the late 90s, early 2000s, it was all about Internet 1.0. And the way I've thought about it is that was initially connecting the globe. And you know, that four elements I think about is that was kind of Earth, global, finally connectivity, mostly tethered to desktop, but that was one element, Earth. Then we started to get to the mid 2000s, and Gene, you were kind of a pioneer in covering Apple and those first events where Steve Jobs would say, wait, there's something more, right? And the network mobile revolution, which is both untethering of a physical device, because now it's in our pockets, right? So now it's this, with Metcalfe's law around network economics was truly explosive. I don't have it with me. I still have my S1 from Facebook. You go to like the third page of the S1 Facebook and you see a map. Mm-hmm. And what Zuckerberg was saying was, I'm going to connect the entire world, but now it's going to be on your phone. It's going to be hyper individualized. So that's virality, right? That's just everything is going viral. That's fire. Now we get to around 2010. And you start to see large telecom players, satellite players, media players saying, I'm getting so much data, so many pictures, so many songs. What do I do with this? And you started to see, hey, let's leave behind data warehouses. Let's go to data lakes. And the cloud is born. And that's Mr. Jassy, spins up AWS. And it just unlocks a ton of value in the corporate space, the educational space, the government. We're all merging to the cloud, right? And to me, that's water. The cloud, water. Then
is that Web 2.0 in your?
Yeah, exactly. That's Web 2.0. And then you get to around 2015, 2016, and unfortunately, there were some scandals in crypto winter. But these folks initially focused on technology and DeFi, decentralized finance. They leverage those three prior revolutions that you and I went through. They leverage internet plus network plus the cloud in a decentralized way. And to me, that's air. Mm-hmm. It's here, it's there, it's everywhere. It'll permeate every single industry, every part of the financial statements. So You were always an equity guy. I was always a high yield guy. And we're both arbitraging capital structure. Mm-hmm. So ultimately, things like tokenization are going to revolutionize how we think about markets. Things like derivatives on immutable transactions is something that still blows my mind, right? Bankruptcy law, Chapter 11, Chapter 7 is going to be changed.
So
it is being changed.
Web 3.0 and being kind of the foundation of decentralization.
Yep.
You know, some thoughts might be stewing around just governments and decentralizing governments. But what would be like the substance, the value add? Is it buying the coffee across border and not having the FX transaction costs? What would be like an example of why that's important?
I'll give you a real life example, right? For me to transfer, let's pretend a small amount in the grand scheme of it. For me to transfer $20,000 to my cousin in Guatemala is very painful, even though it's 2021. There's payment rails, there's bank rails, there's all sorts of things that don't allow me to transfer that to him. And now again, I have this. I can transfer that to him. And again, Sal's an expert. I think there's a lot of focus on tax avoidance or what just happened with a hack, etc. Technology, to me, has always done two things. It finds inefficiencies and it crushes them. Mm-hmm. E-commerce, it destroys them. It's like water. It finds inefficiencies and technology destroys it. What's the positive side of technology? The positive side of technology is that it exponentiates your ability to create. When you and I met, you had no ability to get your voice heard through a weekly newsletter, through a video podcast. Like, these were not available, Gene. You and I would go up and down the elevators in Minneapolis saying, have you read the latest book or magazine? Now, Sal could be, if he wanted to, he could be in Russia or Bali, and the three of us are having this great conversation being recorded. You're going to stop this, you're going to kind of look at it, and you're going to post it online on YouTube. Okay, that's all sounds very 2015-ish, and it is. When in the future, your newsletter subscribers can go one-to-one relationship with Loup, transact with Loup. They don't have to go on someone else's rails. They don't have to go on YouTube. They can go on chain. And years from now, you can prove that the three of us had this conversation. Mm-hmm. Because it allows for a level of transparency that we haven't been able to have. So when you stack up, for your readers, for your viewers, when you stack up decentralization, my huge encouragement is think about it in terms of swim lanes. The New York Times, the Wall Street Journal, the TV will tell you crypto equals blockchain equals Bitcoin. That is amateur hour. Your readers are not amateurs. So there's currency impacts. There's store of value impacts. There's content impacts. There's rail impacts. There's transparency impacts, right? And let me end on this. You've always talked about content is king. And I think one of your first reports was around the continuum of content, the continuum, right? You should post your first paper online at some point. And there is this continuum where when we used to live in the feudal world, 2015, Facebook is king. Twitter is king. New York Times is king. The US dollar is king. Exchanges are kings. We're all trying to get direct listings, SPACs, IPOs. Exchanges are kings. And where we're going is that individuals are constrained by this feudal society. I must go through YouTube to get video out, or I must go through Facebook to access a large network. Decentralization ignores all that.
Oh, got it.
Jack Mahler said at the Woodstock, he said, it's great El Salvador's coming online. The node doesn't know it's El Salvador, doesn't care that it's the president. The president of El Salvador can get upset at the chain. It doesn't know because this new world is totally different. So what's the visualization? You go to Omaha, and that's okay. Then you go this world, and it's a self-driving Cybertruck going through the streets of Miami. Night and day, Gene. So my encouragement again is for your readers to start to think about this world. Different lanes.
That's helpful.
Let's start investing.
I would add to that concept, Web 3.0 decentralization is just much bigger than crypto equals Bitcoin equals blockchain.
Yes.
And I think it just creates whole new businesses that we haven't even thought about. I would also say in the spirit of this is a long road, I think today we've had a full dose. I would say we've gotten a full dose. And the good news is that there's other doses coming because this topic is far from over. Another thought as I was listening and kind of meditating on what both of you were saying, geeks rule the world. The geeks were made fun of, I think, in 2015 when all this was started, and here we go. So thank you for all the smart people who have persisted and brought this through. Thank you to my two smart guests today, Hector and Saul. I've enjoyed it. We'll welcome you back anytime. On behalf of both of those and myself and Loup TV, bye for now.